All right, guys. So today we're going to be conducting our round 5 board meeting. As you can see from the dashboard here, Andrews has taken the lead finally after the 5th round. A lot of that was expected, considering Digby was producing a new product and trying to position themselves lower to saturate the market in the future, considering the low end market is about to reach cap. So with the 10% gain each quarter, teams are about to start fighting for scraps. Right now, Andrews looks better across the board, except for in leverage. But Airy is honestly just there to make their few bucks. And for the low end, I think it's going to be a pretty decent fight towards the finish.
As indicated by the graph, last year our stock price took quite a tumble as a result of overproduction and our bad pricing decisions.
Bad pricing,
yeah, to put it bluntly. However, this year we were able to see a significant rise in our stock price due to a successful year of profits. We're still at we're still less than our main competitor, Baldwin, but at least we're within competing distance again. But they also own more equity in their company than we do. And as Grant alluded to earlier in our earlier discussions, a nice little thing that we could have done to capitalize on our mistake of going into debt last year with an emergency loan was we could have, because since it crashed our stock prices to, I believe it was about $7 per share, we could have taken out a significant loan and bought quite a bit of shares back, giving ourselves more equity in the company.
For cheap. Yeah, that would be nice.
And our AI competitor has paid dividends as well, if you can see that.
So I'll start talking about the stock market for Andrews. So as you can see, like we have the highest stock price, which is like $65.65, and then like only from this round we have an increase with like $25.87. But like if we look at Digby and Airy, Digby is like 43.81 and then Airy is like 33.43, which is like quite a lot lower than us. So I think we're good in this part. And I think like we have a very high stock price also because like we have like, retired some of our stocks. But like if we look at Digby, like they have issued like a lot of stock to raise money.
Okay, so like for Andrew, so like for the industry unit, we actually reached like the potential market. So as we can see, it's like 8,117. So then like but then like for Able, we sold like 18.1, so it's more than like the potential market, which is 14.5%. But as if you look at the totals for the 3 teams in low end market, is that for Digby, they have like a highest market share for this round, which is 46.4%. And then second, it would be like Andrews, which is 36.6%. And last would be like Aries, which is 14.6. But then for Andrews, like we kind of sold in the high tech market, which is 5.4%, a little bit. So then that's what like we were aiming to do actually, to steal like from the high tech market share.
When compared to Baldwin, we're able to add a lot more revenue to our bottom line per product because our production and administrative expenses are much lower. We're still relatively slow in terms of our return on assets. To be honest, we're not utilizing our assets to their fullest potential with respect to how much we've actually invested into them. We can fix that by either generating more profitability or reducing the amount that we are investing into assets. We did not receive an emergency loan this round, and in spite of the hit that we took last round, we're still managing to keep up with our segment competitor in cumulative profit.
So Able has become the oldest product that we have developed. In comparison to Ace, it was difficult to increase its sales unit. And as a result, we've moved our investment focusing on Ace and Andrea. We've spent a lot of money in this round on Andrea's automation to increase profits in future rounds. Able's price was reduced to reflect its age and to make it more attractive to consumers. Team Andrew wants to dominate the low-tech segment with the goal of at least obtaining 40 to 45% by the end of round 8. The initial marketing and production strategy is to optimize market share through a significant investment in marketing budgets at a fair price based on competitors' price points as updated from practice rounds.
So the overall strategy for low end was basically we saw our counterpart Chester go bankrupt last round, and we kind of want to put the other teams in a position that may compromise them without compromising ourselves. So we took a look at all of Able's products, and the majority of them, at least 2 of them, have higher specifications and lower size than us. So clearly they're superior products. So what we did is we made Daddy, which is superior to their products, and we made it so we can at least produce 1,000 units of this product. So this was the first round that low end sold the amount of units that it was projected to sell. Come next round, there will be 800 more units up for grab, and we ourselves added over 1,500. So this round, we preemptively lowered prices, as David mentioned, because we thought that the cannibalizing of each other's companies would start now. Well, it didn't start now. All low-end teams were able to sell out. And next round, though, I feel that the market will contain more items than they can sell. So just for round 5, we just wanted to make sure that we sold everything that we had. We have a feel for what Able and Andrews is trying to do. Airy is consistent, not really a threat in taking market share or anything else.
For the 5-star summary, we focused on getting a star on each department. However, we did not get a star on inventory because of our strategy to not stock out. For that reason, we did produce 50 extra units more to not risk it, but we still managed to stock out. So maybe during the next round, we will be producing a few more units. And for the overall performance, we can see that Ferris has the highest number of stars.